Hey everyone, welcome back to another episode of AML Conversations. My name is Joe McNamara. I am the Director of Solutions Marketing here for AML RightSource, and I'm super excited about the conversation I'm going to have today with Managing Director Vesna McCreery. Vesna has volunteered to sit down with me to talk about the increasing volume as well as kind of the concern that comes with the growing issue of fraud. But rather than me try and lay it out for you, I'd rather flip it over to you, Vesna. Tell us a little bit more about yourself and tell us a little bit more about, what we're going to be covering today.
Hi, Joe, and hi, everyone. I am Vesna McCreery. I have been in-house in banks for about 25 years doing financial crime compliance. Started out at Goldman and went through a number of different banks through regional and global positions, global head of financial crime in a few firms, and then moved into consulting, which is what I do now. So I have been looking increasingly into fraud because it's a bigger problem than it has ever been, especially for our clients, as you know, Joe.
Absolutely, right. And Vesna, I think that's actually a perfect jumping off point. And we were just talking about this before we started recording. But, as somebody who's so deeply rooted in financial compliance, and like you mentioned, AML has kind of been your bread and butter. How are you looking at fraud today, and certainly the convergence of what we're seeing of, what some are kind of titling FRAML?
Yeah. I think in the early days when I started in financial crime, we didn't have that name. And it was just part of due diligence within legal teams or compliance teams. But then after 9/11, it became a much bigger issue. However, fraud and fraud prevention, particularly in the retail and commercial environments in banking, has always been around. And that's because, of course, it was causing losses. And to prevent losses, bank always had their own controls, and they were sitting in operations. So after 9/11 and other changes, particularly in the UK at the time, which actually coincided exactly, those who were doing due diligence got saddled with the titles of MLRO and BSA officer. And as they say, that's how it started. The rest is history. But what happened is that we grew out within compliance and legal departments, whereas fraud stayed in operations. And we were focusing initially more on policy, whereas fraud was focusing on preventing losses. And so there wasn't so much restriction on the investment into fraud prevention because there was a real gain from that. Whereas, if you stop a money launderer putting money into an institution, you're going to lose money. You're not going to retain money, right?
Customers.
So exactly. People come up with a suitcase with a couple of 100 million and you put that in the bank. I mean, I'm joking. I don't think maybe there were such cases, but I have never really seen that, but people say. So that's how we were quite distant and apart. But in the recent years, with the massive growth of fraud, particularly online fraud, the need to bring everything closer together, especially because data also has become digitized. Now we're in a better position to actually look at everything as data as opposed to different disciplines. So I think that's in a nutshell the history, I'd say. You can go into a lot more detail, but.
Oh, absolutely. And I intend to. So, and again, as I think about your last sentiment there around, what we're seeing from a trend perspective with fraud, scale is quite frankly probably at the forefront of the conversation. So when we look around, even at a high level kind of global perspective, how are some of the key regions comparing when we're talking about what we're actually losing to fraud on a global level?
Yeah, I had a look at the numbers and statistics. Really surprising. The fraud has grown to past $1 trillion a year in 24, and that is identity fraud alone is 50 billion, which of course is one of the largest frauds out there. And what's interesting is that fraud is growing everywhere around the world, predominantly in the digital space, online. And we'll break it down a little bit, but there is one place where it's going down, and that's something that you and I should definitely address. So in terms of the regional breakdown, the US is obviously leading, and I was really focusing on countries where our clients are. US is 12.5 billion, UK is 726 million in bank fraud losses, and there's also another SME area, the subject, not subject matter experts, that's us, but the small to medium enterprises, they also have significant losses. And then in Germany, the digital fraud has grown 58% in the last few years, which is incredible. Probably the perception is that it's because they're less sophisticated and there's less support from the government and banks for the losses. So people don't want to go online, but that means they're not as sophisticated. So it's harder. And then Australia is really interesting. That's where it's falling. The government, from the regulatory side, the law enforcement, banks, and unusually telecoms and providers of other services where fraudsters create their environments, which is, obviously the web, have dropped by 25% in 1 year because of the cooperation there. So that's incredibly interesting.
100%, right? And I think, and you could get me started on the public-private partnership model, and certainly I think that's what we're seeing in Australia. But to get back to what I would consider, not only the gold standard we should be looking at, which obviously Australia's broken into something that we should all be paying attention to. But when we're looking at, what the current state is for other areas around the world, what are some of the key driving forces in this explosion of fraud that we're seeing?
So I definitely want to address that, but can I give you a little bit more about why they're doing very well in Australia?
100%.
Yeah, you know what they're doing? They've decided, in my opinion, the reason why this is working, and I've talked to some of our clients in Australia, they say that it's because the telecoms and the web providers were involved, but they were working with the law enforcement and regulators in real time. So they were stopping calls and frauds as they were happening. And that's something that but they call it investment scam fusion cell. You can actually find a report online. It's not too long, and even in the summary, it's very clear what they actually had done. So it's really fantastic that they diverted real life, live, current scam calls, and then they share data in real time so that they can prevent this stuff. And for them to see the result of 25% drop, I mean, if they go at that rate, they'll go down to a really low number within a few years. Of course, the criminals are always developing ahead of all of us because they're cooperating across the globe and they find holes. But this is so impressive.
No doubt, right? And when you think about like the overall characteristics of what I would consider traditional fraud fighting, one of the key expectations is, it's retroactive, right?
Yes.
You can only react to what's happened. And so to see some of these new methods or models that are coming online and really being able to attack them at the source in real time, I think, to your point, is extremely impressive.
So you asked me earlier what's driving the explosion. I think we all can guess that digitalization, us going, particularly after COVID, during COVID, we were, forced to go online. So even people who would not have perhaps gone online, like, my mom and, grandmas around us and so on. That's what happened. And then another thing is that in the last year in particular, AI production of deepfakes, faces, voices. I mean, YouTube, I don't know, I listen to podcasts a lot on YouTube, and now these people that I like listening to, there are lots of fake ones as well. So, I mean, you kind of figure it out. Personally, I can tell. But, there's deepfakes have only made 7% of all fraud so far but they've kind of grown some 400% in the last 2 years, which is incredible. But they didn't exist before that, right? So obviously it's not surprising, and I'm sure that's gonna be a big driver as we go forward. And then cross-border crime networks. That's the serious stuff. When we talk about 1 point something trillion fraud losses, 10 uh, 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 nine out of 10 of the dollars in there is criminal organizations. So it's quite impressive what they're doing. They have and we did a podcast earlier, I think last year, about the criminal networks in Southeast Asia in particular.
Correct.
I mean, these are people who are abducted from their homes. They're basically treated like slaves, and they lived in these compounds in the regions between different borders. And they pose as real people, and they do romance scams and all the other various scams. They open fake accounts, and we talked about cards and all sorts of stuff that they force these people to do. And I've heard recently that romance scams, grooming can last even up to 2 years before they start stealing your money. Can you believe that? That is
absolutely. There was a fascinating report that came out not too long ago. I think it was either TRM or Chainalysis, I believe, like published that not too long ago about that exact issue. Vesna, and I agree with you, right? Like at first glance or kind of first blush, when you think about fraud, your mind kind of goes to these, like you mentioned, these transnational organized crime outfits, folks that are essentially like, if they had a business card, it would be master of fraud, right?
Yeah.
But, at the same time, it's certainly, I think we're seeing some other trends on the individual space, correct?
Mm-hmm. Yeah, I mean, we all know that banks and insurance companies and many other companies are really concerned about being defrauded. And so when you sometimes start getting the questions from them, it's quite annoying. But when I was doing research for this, I always assumed there's going to be a number, of fraudulent, but I didn't know that of all the incidents, 30 to 40% of the incidents, not the value, but the incidents, are from ordinary people who are defrauding companies.
Which again is incredible. And
right?
I mean, it's I had somebody tell me once that, fraud and AML are both areas that, when the economy is good, like people are still finding ways to do it. But when there are economic pressures in place, it only skyrockets. It goes up because, like you mentioned, like, from a volumistic perspective, there are so many more incidents and trending upwards of ordinary people that are, they in some cases feel like they have no other option, right? Like you mentioned, car insurance scams or duplicative invoicing or I was talking about like the Amazon refunds before we started.
Yeah.
All of these things it's fascinating, and it does get back to what you mentioned at the start, which is, this
digitalization,
moving to the digital realm. But, in terms of, other things that we're seeing, I think you had mentioned something around silos as well, but did you want to give some more context to that?
Well, I think what's important for us, I think that the fact that ordinary people are, defrauding so many businesses, and there's a figure of 100 billion loss to small, medium-sized businesses from fraud from ordinary people, which is really heavy for small businesses, right?
I agree.
And people often think, oh, they can afford it. I think that shows, interestingly to me, the culture where people feel that they're abused and used, and so they don't mind doing it to other people, be it companies or someone else, which I don't particularly agree with, but but I think what it shows us is that controls and how to prevent this increasingly need to be connected between fraud and anti-money laundering, because ultimately fraud has always been just a predicate offense, as we say in the UK, for money laundering. So what we see in money laundering controls is the aftermath of fraud, among other crimes, right? And fraud supports a lot of other crimes, as I say, for example, slavery, modern slavery, and theft, and all kinds of stuff. And then maybe, they steal identities or cards and so on, and they use them to create fake identities. They use them to create accounts. and then they put money into that, and that's within organizations. So actually, the more we connect the view, and as we've seen in Australia, like a quarter of all fraud dropped in 1 year. That's just shows that when you connect the dots between other providers, not just banks, but, I think regulators and law enforcement are used to banks providing them all the information, and all the pressure is on them and all the regulation is on them. But I think not only is that unfair, but it's actually not effective. We can
Right.
see
I mean, you're missing the majority of that story, right? Like,
exactly.
it's not all happening within the account. And to your point too, like from the transaction data and anything else that a bank can offer, I think they're doing a really good job and at least trying to play their role. But it is fascinating, right? And I want to hear more from you in terms of the relationship that we're seeing between fraud and AML, which I think, unfortunately, I kind of cut you off there.
No, you didn't. Not at all.
But it is fascinating, right? Because I think you mentioned at the start just how integral the data itself is. And you were talking about the flow of the data. But when it comes to what I would consider, from a financial institution or someone who's overseeing, the overall risk to an institution, like what are some areas that folks should be focused on?
So I think, some things that we find to be useful for quick new customer take on, like biometrics. You show your face, you open an account. In some banks, it's really, really easy and quick. Having good biometrics, fingerprints, face recognition, voice recognition, connecting those dots, connecting that with the location, and various other metrics that help you create a bigger picture of how the customer behaves, and then knowing when that customer is acting out of the normal really does help. Or comparing the real biometrics with the fake. There is quite a good record against those companies that provide anti-fraud tools. So they have quite a bit of success. Sometimes you can break past it, but not every criminal is super sophisticated. And then there is the other thing, which could be potentially forgotten but shouldn't be, is that a number of tools such as natural linguistic programming and other tools that reduce the false positives in the space that in financial institutions we deal with alerts on sanctions and on transaction monitoring, on things that we don't need to look at that are not risk relevant, does allow people to focus on actual risk. So I think that is really important. And as we said earlier, Joe, the combining the data, the stuff that we see in fraud and the stuff that we see in AML, obviously that's going to be very different if you're a market trader. Then you probably are not going to need a lot of biometrics. But if you are a crypto firm that deals with retail customers or a bank and so on, then that kind of stuff really is important. So it depends what you are and what products you have, but a combination of all these tools that are out there is really, really helpful. And doing and investing into that early on, bringing your data together and mining that data as well as you can, actually prevents the losses that banks have. And even if they're not losses that banks have, even with fraud that is perpetrated against their customers who then ask for money back in some countries, like in the UK, unlike Germany, where we've seen that there's not a lot of refunds, in the UK, in almost every case, you get a refund. So, it does help to have controls which save the money. So this is another way that fraud and AML are coming together these days.
Right. And again, I think it gets back to this concept that we saw with the Australian example, right, of being proactive instead of trying to be reactive. And I know that, and by the way, folks, there will be a tandem piece that Vesna's actually written up with a little bit more detail. But obviously, like, my mind goes to, some of the examples you gave, like from a typology perspective. What are we learning and what are we knowing or continue to evolve our knowledge around what our customers do and what we should expect them to do, what good customers are doing versus the ones that do pose the most significant risks, right? And so I think, with my final question, and I might be lying here, I might have another one after this, but my final question is really around, if I'm a financial institution, what can I do right now to be keeping up with these types of threats?
I think definitely investing in your controls, um, bringing AML and fraud together, subject to your product type. As I say, somebody who is a pure investment bank, they are going to have to do it for pure KYC. They just need to, they don't have transactions, so they need to look at who they're dealing with. But majority of financial institutions will have some exposure to transactions, and therefore that means they are retail, they have number of customers who are small, big, and so on. They do need to watch out the fakes, because they can get also wrong instructions. It's not just the customers that are exposed to that. So invest into AI. As I said earlier, reduce the false positives. Don't forget to do that. Optimizing your tools like transaction monitoring tools, sanction screening tools, it's still worth doing, because those people that you're already paying to do this stuff could be focused on something smarter than closing, level one obvious alerts. And then education of customers definitely helps. But I think of all the things, and there is a lot of education of customers in the UK for sure. I'm really strongly aware of that. But fraud is rising. The only place where I've seen real change and drop in fraud is Australia. I haven't seen anything else, and that's where there is the systemic approach, as we've said. Regulators, law enforcement, and institutions beyond banking and financial institutions get involved and work on it together and share live information and stop fraud and crime in real time.
Which again, I think is a fascinating approach, and we're certainly seeing the results of that model. I think, and to your point too, like the education of customers, it gets back to like, when your bank starts peppering you with these questions, it's probably good to give them your customers a little bit more context around, hey, here's why we're asking these things. It's not exactly apples to apples, but when I think about the overall approach, it's essentially crowdfunding or crowdsourcing the ability to keep your institution safe, right? If you can educate the customers that depend on you to access their funds, and kind of give them a little bit more than just, hey, tell us the answers to these questions because we're the bank, or whoever kind of holds your money. I think that there'd be I think additional transparency that would come with that, and certainly from the perspective of, and by the way, we're doing this to try and make sure that you're not going to get scammed out of your money. You're not going to fall victim, and that we're going to kind of keep the nefarious actors out of this institution. So
No.
I think it's fascinating. I think it's
what's happening is that a lot of our clients, where we do either remediation or support them with their business as usual work, we're seeing that approaching customers for additional information, updating the KYC and so on, customers often don't want to respond because they don't trust that it really is the best.
Well, they don't understand why the questions are being asked.
Scary, yeah. It's so difficult because of that the fraud complication. Yeah.
I completely agree. So, Vesna, I appreciate you taking the time to sit with me, and obviously this is probably just the tip of the iceberg when it comes to the larger fraud issue. But any final thoughts, especially around any kind of takeaways for AML professionals?
I think that the most important thing is to try and get the right investment, and also to try and make sure that I was going to say circumvent. That's not the right word, but I think there is a lot of pressure on institutions that are global these days not to share data across borders. We're seeing a lot of jurisdictions are going back a little bit national, data protection and so on, but criminals abuse that. And, we've seen that the figures of fraud occur, across the border much more than, say, just in the UK. So inflow of fraud coming into the UK from abroad is also greater. So that's why I think that this public-private is great locally, but I think keep talking to Wolfsburg, keep talking to law enforcement across the globe and see what we can do to join forces to fight this scourge in the world. And then I think another thing, Joe, that I know you're doing and we should mention here is I know you're going to talk to some of our colleagues who do the work for our clients and talk to them about what they're seeing as well in practice, which could be really interesting for a number of different institutions.
Absolutely, right. And I think it kind of flies that same banner of information sharing safely, appropriately. But in this case, I think the numbers themselves, kind of paint that business case as to why it's so incredibly important to form those partnerships and be able to, continue to work and, like you said, collaborate to address this scourge on the financial system. So Vesna, thank you again so much. Really appreciated the time, and hopefully we'll have you back on soon.
Thank you very much, Joe. See you. Take care.
Bye-bye.